Right, so here's the breakdown I promised on the trade that I took on EURUSD last Friday. So let's get straight into it. As you can see, we have a fair value gap right here, right? A daily fair value gap. Good. And then Wednesday's candle. As you can see, we had news on Wednesday, so price tapped into this fair value gap and then went up to create this high, right? So the next day, that was Thursday, right? Thursday's low, right? Thursday's low took out Wednesday low. So Thursday's candle took out Wednesday's low and did what? Closed inside Wednesday range. So now the expectation is that the next candle, right? Since Thursday has formed a reversal, we expected Friday to do what? To expand higher, right? Good. And the target initially was 50% of this wick. 50% of this week. Good. So after you've confirmed your daily bias, right? The next day, which is Friday, you are looking for a PD array, right, on the 4-hour time frame in Thursday's range, right? So this was Thursday, so let's mark Thursday. Good. So now, immediately Friday opens, right? You are looking for any PD array below this area, below the 50% of Thursday's candle. So there we have it. So Friday opened here. This is when Friday opened, right there. So when Friday opened, as you can see, we already had what? A fair value gap right here. We had a 4-hour fair value gap inside Thursday's range. So immediately Friday opened, this 4-hour candle right here, that is the 1 a.m. 4-hour candle, dipped into the 4-hour fair value gap, right? And then it reversed. So you can see it dipped into it and closed outside. So the trade idea was that after this reversal candle has done what? Has closed, right? After that reversal candle has closed, we want to trade the continuation, which is this 4-hour candle. So after the 1 a.m. 4-hour candle has closed, we are trying to trade the 5 a.m. 4-hour candle, and then if you are lucky enough, you also trade the 9 a.m. 4-hour candle. So that was the plan, right? That was the idea. So now we go straight into the 1-hour time frame after this reversal has formed, right? After this 1 a.m. candle has formed the reversal, we go straight into it. So when you go straight into the 1-hour time frame, what are you looking for? You are looking for a swing point on the 1-hour time frame and also a change in state of delivery. So now we have our change in state of delivery here. We have the change in state of delivery, right? And also 5 a.m. candle, right? So we are trying to trade the 5 a.m. 4-hour candle. Now where did the 1 a.m. 4-hour candle closed? This is where it closed. This is the candle that closed it. So the next candle was the 5 a.m. candle, right? So this candle that I have the indicator on, being the 5 a.m. candle, is where the 5 a.m. 4-hour candle opened. It opened here. It's opened higher, right? So we mark it at 5 a.m. Right. That's the 5 a.m. candle. And then what do we have again? We have a fair value gap. We have a fair value gap. So that fair value gap is from the 4-hour candle that recently closed. So that 4-hour reversal candle that tapped into that 4-hour fair value gap, okay, that 4-hour candle had a fair value gap when you move into the one hour time frame. We also had a fair value gap. So the next candle, which was the 6 a.m. 1 hour candle, tapped into that fair value gap and then also closed outside. So it reversed. So when it reversed, the idea again is to do what? Trade the continuation candles, right? So the idea is to trade the 7 a.m., 8 a.m., and 9 a.m. candles on the 1 hour time frame. So now we have the narrative, which was the 4-hour fair value gap, right? We have the refinement, which is the 1 hour change in state of delivery, and then the 1 hour fair value gap. And also remember, we are trading the next 4-hour candle, which is the 5 a.m. candle. So immediately it opened, it made its low. Its low is what tapped into that 1 hour fair value gap. And then the 6 a.m. candle, right, reversed. So we are trading the 7 a.m., the 8 a.m., and the 9 a.m. So then what do you do again? You move into a lower time frame, like the 5 minutes time frame, for your entry. So when you go into the 1 minute time frame, the 5 minutes time frame, we have what? Another change in state of delivery right here. So this is the 1 hour fair value gap. Price tapped into that 1 hour fair value gap on the 5 minutes time frame, changed the state of delivery. So the reversal has already formed, right? So the whole idea is to trade a continuation. So when the reversal formed at 6 a.m. So the next candle, that was the 7 a.m. candle. We have a continuation order block right here. So now we have a change in state of delivery. Price went above it, created a series of down close candle and then closed above it. So we have a continuation order block right here. So the whole idea is to do what? Trade that continuation order block. Now it's up to you. Okay, trade from that continuation order block. So it's up to you to want to enter right on the change in state of delivery, so that when price comes back to it like this, you get into it, or after the price has closed above that continuation order block, you just open your position on the next candle and you target 2R. And you have your stop loss either below those order block candles or the wick. So this is how we got that trade I posted earlier. Have a sharp 2R trade. And then that's it. So this is the trade that I took. If you have any questions, you can bring it to my DMs. Thank you.